Well, I do want to wish everybody a very, very good Friday morning. And I hope that this will be a very restful and pleasant day for you. We have the FSD free trial rolling out to approximately 1.6 million Tesla owners who don't currently pay for the service. There's going to be some big potential results from this move, and there's going to be some metrics that I think we should watch. So, number one, many more owners will take a look. I don't know what that percentage will be, but it'll be interesting. Maybe Tesla will tell us how many people take advantage of this offer to try out the 30-day free trial. Number two, some of those will be thrilled and they'll decide to keep using it. That would also be a really good metric for us to be able to see. The Tesla community is just more interested in these things than, say, the people who buy Chevys. Number three, some will show and tell. So some people who get this new capability and love it and see that it's very useful and see that that it does a good job, they're going to want to tell their neighbors, their friends, etc. This will be very, very good for the overall proposition. Number four, some of those folks who see the FSD in action, and maybe it's even their first time in a Tesla vehicle, and they see how fast it is and how clean the interior, how the minimalist interior. They see all the benefits of a Tesla. Maybe they'll make a decision to buy. Maybe not today, maybe not tomorrow, but they'll go, you know what? That's a car that I want in the future. And number five, some will decide that it is too expensive. We need to know that too. So hopefully we'll get some kind of way of analyzing what happened to the folks who did try the 30-day trial but didn't continue. Are those folks who never uploaded the 30-day trial to begin with? Hopefully Tesla will be doing some kind of monitoring, some kind of analysis, maybe even picking up the phone or sending emails and doing a little bit of surveying. What kept people from using the 30-day trial to begin with, and or what kept them from going ahead with it after the 30 days was over? Now then, at the same point, we've got these folks that are going to be getting a ride with a customer service rep when they pick up their brand new car. And they're going to decide at the end of that ride, that 20 or 30 minutes or however long that ride takes, they're going to decide whether to keep the product live, whether to keep FSD going for their 30-day trial. I mean, it's not even going to cost them anything, but they'll have a choice. They'll tell the customer service rep, no, I'll do this trial later. Go ahead and turn it off now. Or no, I don't want to do the trial at all. And this is going to give those reps a real big opportunity for feedback. Hopefully these reps, after a few days of doing this back and forth, they're going to get better and better at understanding the customer needs, and they'll be responsive to what they're hearing. They'll be talking to one another. They'll be talking to corporate. Corporate will be feeding back. There's going to be a big feedback loop thing here going, and lots of back and forth, which should help Tesla to understand better about how these new customers are perceiving FSD, how they're perceiving the current levels of FSD, and what some of their objections are, et cetera, so that they can make some decision. So that's all going to be huge. I mean, these are, to me, as somebody who's been doing this my entire life, I mentioned the other day, it's kind of like a trade show for me. You sit in that trade show for 3 days, and it doesn't even matter whether you sell anything. What matters is all the feedback you get, rapid, all day long from people coming to the booth, and you're talking to them about your new items or your new ways of doing things or changes you've made in your products, and you're getting this immediate feedback. You get to change your pitch, so to speak, see whether the new pitch works better or worse, and you're getting rapid iterations of your understanding of what customer objections might be and what the good news is about what you're offering. So that's what I see these reps doing on a daily basis. I hope it works out that way. All right, this is from Cybertruck lead engineer Wes Merrill. He confirmed that Tesla will indeed be releasing a significant improvement to the all-electric pickup truck's frunk. To the frunk. They're going to make a big change in the frunk. Well, what's wrong with the frunk? Well, you may have heard that some people were using carrots as a test of whether or not the frunk was too sharp at the edges and too much downward pressure, and they could actually put some carrots in that space where the trunk was closed, the front lid was closing, and they could chop carrots that way. So this has been known information for at least 3 or 4 weeks. I would say, yeah, roughly 4 weeks we've known about this from some of the earliest reviews. But apparently Tesla's been aware of it. Yeah, of course they are. And they're going to change that. They're working on making a much more sensitive in terms of the frunk not being able to go down if there's something in the way. And the Cybertruck lead engineer wrote, so many carrots, but big improvements coming via an over-the-air update. Tesla team is working hard on this. So there you go. We will look forward to those changes coming in short order. So according to, this is Herbert Ong, ask Herbert, or not ask Herbert. Whoops. So according to a report by the Financial Times, AI and robotics providers foresee significant adoption of their technology in manufacturing environments. One company claims that 14% of manufacturing and automotive jobs will be automated in the next 4 years, I'm assuming by robots. And Goldman Sachs projects that the humanoid robot market could reach $38 billion in sales by 2035. Okay, 38 billion by 2035. That's probably an okay number. I'd have to back into that, but I think, yeah, that's probably within reason. It says, at least if robots like, this is according to Goldman Sachs, at least if robots like Tesla's Optimus can become as capable as their makers are claiming they will be. This from Sawyer Merritt this morning. It says that Rohan on the Tesla Semi, we are in the process of building a manufacturing facility at Giga Nevada to significantly increase production. Now, we've known that, but it's always nice to just hear it again. This is from Ray for Tesla this morning on X. He says at yesterday's SU7 launch, Xiaomi, Z-I-A-O-M-I, and I think it's pronounced, I think I looked this up, it's pronounced Xiaomi. Their CEO, Lei Jun, said that Tesla's top-notch FSD is the benchmark. Their top-notch FSD is the benchmark in the autonomous driving field worldwide, and that the hardware computing power inside the new Model 3 exceeds 700 TOPS. He admitted Xiaomi's EV SU7 was benchmarked against the Model 3 during its development in 2 key areas: industry-leading battery consumption and autonomous driving, and it may take Xiaomi 3 to 5 years to catch up in powertrain efficiency. Now, this is the part I love. On the other hand, he said the SU7 is better than the Model 3 in every other category. Yeah, whatever. Okay, I'm glad he thinks that. He should think that about his car. But interesting that he's admitting 3 to 5 years to catch up in powertrain efficiency. And of course, maintaining that Tesla is far ahead in autonomous driving. This is from the Wall Street Journal this morning. Tesla spent approximately $6.4 million on U.S. digital advertising in 2023. This is according to estimates from Vivix, a division of ad tracking company Media Radar. While a dramatic increase over the approximately $175,000 that Vivix estimated Tesla spent in 2022, it was a pittance compared with investments by other car makers. General Motors, for instance, spent $3.6 billion on global advertising and promotion in 2023, or about $580 for each of its 6.19 million vehicles it sold that year. This is according to financial reports. Tesla, in no way, this is Randy speaking now, Tesla in no way intends to spend as much as other car makers do, but it is entirely possible that the total cost of advertising will result in a total increase in per dollar profits that will be greater than the spend. That's would be good enough right there. If you could spend $100 a car and you could then charge $100 a car more than you're already charging, that would be worth it right there. Because why? Because you're also going to sell more cars. Most of the time when you're doing an analysis of whether your advertising is working or not, you want to see more unit volume, whether that's products or services. You're going to see more unit volume, and the unit volume is what you're expecting will make up the difference in terms of what you're spending. And And there's a rule of thumb used in most industries that you want to triple your advertising spend. So if you're spending $100, you want to see $300 worth of value coming back in terms of overall profits. Now, if in the case of Tesla, and this would be true for anything, but in the case of the automotive industry, you got really big numbers you're dealing with. If you can prove that your additional production, your additional unit sales has allowed you to push your price high enough to just cover the amount of money you're spending, that would be great. And then you get all the additional unit sales times profit as a bonus. Way easier maybe to determine if you're getting that kind of pricing power than it is even to prove that the advertising is generating the additional sales. Anyway, something to look at. This is Randy Kirk. By the way, if you didn't know that, please hit the notify button. I came up with a video this morning that you are going to go crazy over. I'm pushing Cern Bashers Part 2 over to tomorrow because I want to do this one for this afternoon. When I say this afternoon, it's going to be 10 o'clock when this one is produced. Roughly in California, I'm guessing this second one will come out around 1 o'clock California time. And then somewhere around 4 o'clock this afternoon, Larry Goldberg will help me bring in Good Times Friday, Good News Friday, Good Friday, good time. Anyway, Larry will be on later today. Don't miss any of that. That's why you want to hit notify. In order to do notify, you have to be a subscriber. And if you're not a subscriber, the question that I always ask is, why not? It would really help me if you would be a subscriber. And then hit that like button and then potentially join Patreon. By the way, had a big order on the Cybertruck water bottle openers yesterday. I should have jotted down the name, but anyway, very, very cool to get another bunch of those going out the door. You might want to think about getting some of those too. All that information is down below in the description. So I waited this morning to put this out until after Chair Powell finished his interview. Here were my takeaways. Number one, he said that the PCE, we'll talk about the PCE in a minute in depth, but he said in terms of the numbers, the big numbers, he said they were in line with expectations. The core comes in at 2.8, the headline at 2.5. Those are year-over-year numbers. He says last year there was good data from May all the way to December, and then all of a sudden the January data shocked. He says this data is better, but not good enough. This is what he said. So I think we're still looking at June, July as the earliest that we're going to get it, but we're going to have to get better numbers than 2.8 and 2.5 in the next 2 months. We're going to have to get better numbers in the next 2 months in order for them, as he continuously says, in order to have the confidence, needs the confidence, more like last year's readings. The readings that he got between May and December, those readings were good enough. He just needed more of them. Okay. Well, he also said these things. The things that matter to the U.S. economy is not what the Fed does. I've been saying this over and over again, that for the last year or longer, all of the attention of the markets has been on what is the Fed doing and what's happening with inflation, not on things like earnings. And then what did he say? He said that the number one thing people should be interested in is productivity. Oh, well, so I like him so much better than I did even yesterday. He says, what is adding to productivity? He says, how are we adding more skills to the workforce? How are we investing in things that add more productivity? Those are the things that we should really be paying attention to. He says there's too much to focus on. There's way too much focus right now on what the Fed is doing. Things like trade and what the administration is doing, these are way more important than what the Fed is doing, and thinks that we're making a mistake by focusing that much attention. He finally said U.S. exceptionalism right now is a thing, and it's being talked about all over the world, that how much better the U.S. economy is doing than any other economy in the world, certainly any other first world nation. The economy is growing better, growing faster. And he says productivity, once again, he says productivity is the key, and that a lot of the European countries right now, that is their focus. They're trying to become better at the productivity thing in terms of getting a more flexible workforce, You know, he didn't talk about the fact that in order, if you really want to get the most productivity, you have the government get out of the way of business. And in Europe and in China and in Japan and Australia and all these other countries where they're not as productive and they're not doing as well as the United States, the productivity that they're not seeing is because the governments they're over-regulating the economy, over-regulating those businesses. They're getting in their way with all kinds of labor rules and everything else. California is now doing the same thing here, and it's hurting California. Companies and people are moving out of California as a result. They're moving where? They're moving to the free states of Texas, Florida, Tennessee, etc. And this is not a trend that's going to go away unless California figures out that they need to get out of the way of the businesses that are here. Okay, so productivity. This is the channel that's all about productivity. From Market Watch this morning. Okay, let's dig into this PCE index. This is important stuff. The PCE index rose 0.3% last month. That is a 3.6% year-over-year rate if it was continuing, which is why the Fed would be concerned. And that was below, though, however, it was directionally good because it was below the 0.4% that happened, that the economists were predicting, and it was lower than January. An uptick in February inflation was mostly in line with forecasts, but the 0.8% advance in consumer spending last month, 0.8%. So this is not good. This is 10% a year. That far exceeded the experts' projection of a 0.5%, according to the Wall Street Journal. Okay, so we've got consumer spending continuing at very high levels, but that consumer spending is not coming from earnings because personal incomes only moved up by 0.3% in February, which the Fed probably thought that was a perfect number. But the perfect number does not meet up with that spending level. That means this indicates that consumers are willing to continue to dip into savings and also borrowing in order to continue to spend like crazy people. Swanky said this in commentary Friday morning. It remains to be seen how long this relationship can last. That's what has been said all this week, is the consumer is going to run out of steam. The Bank of America said they'll run out of steam in the third quarter. Third quarter is what I've been talking about. We'll see what happens. It's going to be interesting to see what happens the rest of this year. Anyway, the cost of goods, this is new. So this is everything reversed this month. The cost of goods rose 0.5% in February after declining 4 months in a row. So cost of goods going up big time. Meanwhile, the cost of services rose at a slower 0.3% last month after a 0.7% gain in January. So we've had a reversal here. Cost of goods going up, cost of services coming down. Economists don't expect the cost of goods to suddenly start rising again, but they doubt goods prices will decline as much as they've been declining. Goods prices are now down slightly from a year earlier. What they're not looking at, I got to keep talking about it, transportation costs are going up because of oil and gasoline, and this is not going to change. I don't see it coming back down into the 70s. We're now into the 80s, approaching the 90s with Brent. This is not going to turn around, and in fact, it could keep going up, and that's going to impact food prices. It's going to affect non-food prices. It affects everything across the board. In fact, on my Amazon business, just this last week, I increased my goods prices because I had never taken into consideration the freight increases that came during the year after the pandemic. Now I'm finally got those in. I needed to dial my numbers up. Okay, then it goes on. This is more from Market Watch. The cost of services is the Fed's chief worry. They have climbed 3.8% in the last 12 months, down just a tick from the 3.9 yearly rate in January. Now we go to the core. The so-called core rate of inflation, based on the Federal Reserve's preferred PCE index, has accelerated since the end of 2023, complicating plans by the central bank to cut interest rates. The annualized rate of core inflation in the past 6 months, and this is what the Fed looks at, rose to 2.9, up from 2.6% in January and 1.9% in December. So it's a big, big increase on the core. This is what's really undoubtedly bothering Fed Chair Powell this morning as he was giving this talk. The December reading had been the lowest since the fall of 2020, but now we're way back up a full percentage point. Economists also like to use the 3 and 6 month annualized rates to gauge the most recent inflation trends. The yearly rate might not be as reflective as what has been going on lately, and what we're seeing going on lately is this bump in inflation. And I'm saying, look at oil, housing prices, but housing prices are not in the core. The annualized rate of inflation in the past 3 months rose to 3.5% from 2.8% in January and 1.6% in December. The core rate strips out food and energy and is seen as a better predictor of future inflation. I just misspoke a minute ago. It is the core, or the deep core. I forget what they call it. That strips out housing also. The core does not strip out housing. So yes, we've got the price of housing, but also the underlying costs of energy as it impacts everything. That's what I'm talking about. Oil affects transportation and everything gets transported. Even services have people being transported and having stuff being transported in order to do the services. The cost of food and especially gas can undergo sharp fluctuations in the short run. That's why they pull those out. Economists like to slice and dice the information in these reports to try to get a better sense of what's really going on. And one number in particular was relatively positive in a sea of more dreary ones in the February report. And that's the supercore. There it is, not the core, not the ultimate core. It's the supercore rate of service inflation. This figure strips out the cost of energy and housing and is seen as a proxy for labor costs. Labor is the single biggest expense for most service-oriented companies. Actually, the biggest source of cost for most companies. The supercore rate of service inflation rose just 0.2% last month after a 0.7% increase in January. So that's good. The supercore rate has risen 3.3% in the past 12 months and hasn't moved much since November. It's risen even faster if viewed through the prism of 3 and 6 month annualized rate. Before the pandemic, the supercore rate rose about 1% to 2% a year, underscoring why U.S. inflation was so low. Labor costs rose very slowly in the decade prior to the pandemic, and that's not always a good thing either. That's another problem with the way that the Fed has to make this balancing act, is that when you've got inflation extremely low and you also have labor costs raising extremely low, sometimes over decades, and that's what we saw from 2000 to 2020, even 2022, we saw that labor was not keeping up with even the small amount of inflation that was taking place. Okay, we got this from Morningstar this morning. Continuing to talk about the PCE report, the report also showed a 0.5% gain in wholesale inventories in February. Oh, I'm sorry, this is not about the PCE. This is the wholesale inventories report. We had a 0.5% gain in wholesale inventories and retail inventories up also 0.5%. If you take out autos, retail inventories were up 0.4%. What does that mean? That means that auto inventories were up more than 0.5%. So we've been talking about auto inventories being up, but it looks like we're continuing to accumulate goods inventories at the wholesale and the retail level. Now, as somebody who understands that part of the supply chain extremely well, this could be because these people are needing more inventory. But what we saw in retail was that there was a retail overhang. There was still this big retail overhang. 9% retail overhang. So adding another 0.5, that seems to be going in the wrong direction, and there's some confusion there. And why would wholesalers also be increasing inventories? One reason could be that retailers are saying, I don't need any more, and the wholesalers are having to eat that inventory, or at least temporarily. Anyway, okay, I think I'm done. Be sure to hit notify, because you're going to want to check out this story I got coming up later today. It's going to be about FSD, but I'm going to take another completely different approach, something you've heard about maybe before, but maybe haven't thought about it in a while. And I think the timing is right. And I'm going to put it out there, and maybe Tesla will decide that this is not just me. This is Kathy Wood thinks this is the right thing to do right now. I know I'm teasing. Come back in a couple hours, you'll see what I'm talking about. Okay, and then we've got Larry Goldberg later today. By the way, Cern Basher, with all his charts and his graphs, and they're really cool, and some cartoons thrown in, and this stuff is valuable. It's really helpful for helping you to understand what the economy is doing, not here, around the world. And he had some really cool stuff going on with regard to what is going on with gold, which is now at record highs and continuing to go up. Anyway, part one was yesterday. I'll put the card right here. Part two is going to be booted to tomorrow on Saturday, because I got this special coming up here in just a couple of hours. Remember to hit like and subscribe and notify. And that's it. It has been great talking to you.